Two for the price of one today as we dive into two surprisingly hot markets in the Southwest Florida region, Sarasota, Bradenton, and Fort Myers, Naples. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons, your Southwest Florida update. You know, we are generally quite proud of our forecasting track record, and we're pretty good at picking the winners and the losers, but every now and then we miss, and we're very honest about that, and the Southwest Florida region is one that continues to prove us wrong. These markets continue to perform very well in spite of pretty much every economic metric and vital sign suggesting the Southwest Florida apartment markets should be struggling. Here is the bottom line. This table shows the top 5 markets for year-over-year revenue growth among the nation's core 100 metros. There you see Fort Myers, Naples at number 3 and Sarasota, Bradenton right behind at number 4, both with annual revenue growth right around 8.5%. Now keep those rankings in your mind as we ponder this next list. This shows the 5 markets that are furthest away from recovering the jobs lost in the recession. So it's measuring proportional job change between the start of 2008 and today. And 2 of the worst 5, Sarasota, Bradenton, where the job base is 9.7% smaller than it was 5 years ago, and Fort Myers, Naples, where there are 7.6 fewer jobs today than there were 5 years ago. And the only markets in worse shape than these 2 markets are 2 in Nevada, Reno and Las Vegas. Now let's take a look at apartment performance in both spots, starting with occupancy. These Southwest Florida markets got hammered during the recession, both seeing occupancy dip into the 80s, but then both recovered surprisingly quickly, even though the economy here wasn't doing much better initially. As of Q3 2013, occupancy came in at 96.6% in Sarasota, Bradenton, and at 95.3% in Fort Myers, Naples. It's a similar story looking at the rent change pattern. Rents tanked in 2009, but bounced back surprisingly fast as occupancy recovered. So these 2 markets have been in 2 of the nation's best for rent growth consistently now for about 2 years, and both set new highs for year-over-year rent growth in this cycle in Q3 2013. Rents up 7.7% annually in Fort Myers, Naples, and 7% even in Sarasota, Bradenton. So what's going on in Southwest Florida? Well, for one, this area has a ton of privately owned condos offered for rent. And when the condo market went bust, some of the people most affected were renters living in privately owned condos offered for rent. So the next logical step for them was to move into an apartment. And secondly, retirement markets like these tend to be a little bit less dependent on job growth, so that's certainly playing a role. And I should also note that job growth levels have actually improved of late, even though the overall economy remains in a big hole relative to where it was 5 years ago. But the big question is, how long can this hot streak continue for the apartment sector? And our view is probably not much longer. With the economy starting to heal, the condo market is going to pick up again, and the return of some investor-owned condos offered for rent will likely force some competition for the apartment industry and lead the operators of the apartments to back off on rent growth and certainly slow the pace of demand as well. But Southwest Florida has proven us wrong before, so we'll see. And that wraps us up for Southwest Florida. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.